just got off the phone with Roy, who we're helping with an upcoming auction he's looking to attend. On the call, he told me about the absolute debacle he had with his bank, saying that he had arranged a meeting to get the pre-approval process started. But instead, his banker went on a 30-minute rant on why pre-approvals aren't worth the paper they're written on, and that there was no reason for him to get one. Today, we're going to deep dive and look at whether indeed Roy's banker was right, looking at whether a pre-approval is worth the paper they're written on, the main issues when looking to get yourself a pre-approval, and why you should or shouldn't get one. Let's start off with what the banks actually say a pre-approval is. Looking first at what Westpac's take is. It says it really is important to understand that the approval in principle doesn't guarantee a home loan approval. Now looking at Suncorp's take, they're saying, does a pre-approval mean that my loan is guaranteed to be approved? And the short answer again is no. It says that while a pre-approval means that you're likely to get a loan approved, it doesn't provide an ironclad guarantee. At this point, we get the feeling that a pre-approval isn't a promise. So if it isn't a guarantee, then why get one? And later in this video, we're going to uncover the reasons why it might make sense to get one, the issues with pre-approvals. There are many reasons why your pre-approval might not get formally approved. 3 include 1, changes in assessment rate. Essentially, the higher this is, the lower your borrowing capacity. 2, lender's mortgage insurance, also known as LMI. More often than not, your pre-approval is only looked over by the bank and not their insurer. And 3, the postcodal valuation. Each lender has a different set of requirements. This means that when you're buying a home, you might find that you'll need a higher deposit depending on the postcode or type of property you're looking to buy. The key to having a pre-approval worth more than the paper it's written on is first knowing the risks, and second, ways to mitigate. So if we look at the 3 risks we've just identified, there's a few ways you can mitigate. The first one with your assessment rate is find out if your lender honors in-flight applications. That's to say, do they assess based on the application date, that's when it was received, or rather when it's reassessed? That's when you're looking to receive a formal approval. Second one is your LMI. Does a bank self-insure or is it provided by a third party? And if it's provided by a third party, do they have a delegated underwriting authority? And what's the parameters around the banks to make a decision internally, if at all? And the final one, your valuation or postcode. Does the lender have a specific postcode restriction list? And are the types of properties you're interested in within the bank's guidelines? Should you get a pre-approval or not? The key to whether a pre-approval is worth doing is to understand the lender's specific limitation and how you link in with them. The first step is know what you want. The type of property, location, budget, uncover every bit of detail. This will help you match with the right lender. Here are the few questions you will want to ask your bank or a broker. What happens to my pre-approval when the assessment rate increases? Is a pre-approval automated or will it be fully assessed? And what are the variables associated with my pre-approval and how will they specifically affect my chances of getting formally approved? The right pre-approval is worth its weight in gold, and to make your life easy, use a mortgage broker. They'll help fast track the entire process, avoiding the common mistakes people make, and it's one of the reasons why now more than 70% of consumers use a mortgage broker. And if you're looking for a great mortgage broker we can help, reach out on huntergalloway.com.au or you can call us on 1300 088 065. We help Australia-wide and don't charge a fee for our service. The problems with auctions. If you're going to go to an auction, get a pre-approval every time. Once received, identify all the limitations with your pre-approval and know the associated risks. A common risk is evaluation. This is something lenders won't complete until you've got a signed contract to sell. So be sure you complete your research beforehand, knowing what constitutes value in the area. This will help shortfalls in valuations when you do and are successful in the auction. From there, you'll want to have your broker or banker complete all their checks on the property to make sure there's no limitations or issues with your bank-specific policy. Auctions are unconditional and it means there's no exit clause, so be sure you speak and get advice from a conveyancer or solicitor and have everything reviewed beforehand so you know exactly what you're getting yourself into. Commonly asked questions. My borrowing capacity is $5 million and I only want to spend $1 million. What do I need a pre-approval for? And whilst this might be true, credit assessment includes more than just your affordability. Here are 3 things you might not be aware of that the banks look at. Firstly is your transaction history, and we've seen banks decline for this. The second one is your credit score, and this also includes the bank's internal scorecard, which is an unknown. And the final one is the appetite. And whilst you might meet all the bank's criteria, the bank can still decline your application simply for not meeting their appetite. My advice to you is if you're planning to put offers on properties, then you most certainly should get a pre-approval. Getting a pre-approval will affect my credit score. Whilst in the past this was the case, as we had a static credit scoring system, this has since changed and we're now with a live credit scoring system. And this means that every debt you either had or now have will show your payments over the last 24 months. This has a greater impact on your credit score than the number of credit inquiries you make by, say, applying for a pre-approval. So make sure your repayments are made on time every time. A pre-approval isn't needed for house hunting. Yes, and whilst true, getting a pre-approval upfront will make the whole process smoother. Think about it for a moment. You'll be going through the process and providing the paperwork either way. The only difference is whether you do it upfront with no pressure or once you've found a property and the pressure is on. Realistically, there's no good reason for not getting a pre-approval if you're actively looking to put offers on properties. And there you have it. Here at Hunter Galloway, we get home loans approved. So if you live in Australia looking for a great mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 008 065. Thanks for watching, and I'll catch you next time.